On Monday, February 23, 2026, IBM stock had its worst day in 26 years. The company lost over $31 billion in market value in a single trading session, a 13% drop. The culprit? A blog post from Anthropic about COBOL. Joining me to unpack what just happened is Marcus, who spent years as an IBM consultant and now analyzes enterprise software. Marcus, welcome.
Thanks, Alex. This has been wild to watch.
So let's start with the basics. IBM, a 115-year-old company, just had its worst day since the dot-com crash, and it was triggered by COBOL modernization?
Yeah, and to understand why this matters so much, you need to understand what COBOL is and why it's still everywhere.
Walk me through it.
COBOL stands for Common Business-Oriented Language. It was developed in 1959, 67 years ago. And here's the thing, it never went away. Hundreds of billions of lines of COBOL code run in production every single day. Banks, airlines, insurance companies, government agencies, all the critical infrastructure that keeps the world running.
Why didn't they update it?
Because it works. COBOL was designed for high-volume transaction processing. It's incredibly reliable, incredibly stable. When you swipe your card at an ATM, there's a 95% chance that transaction is being processed by COBOL. When you book a flight, COBOL. When you file for Social Security, COBOL.
So the code is nearly 70 years old, and it's still running the world's financial infrastructure.
Exactly, and that's been IBM's goldmine for decades.
Explain IBM's business model here, because they're not just selling computers, right?
No. IBM sells mainframes, these massive, incredibly expensive computers that are optimized for running COBOL. But more importantly, they sell the services around them, maintaining the code, modernizing it, consulting on it. That's where the real money is.
How much money are we talking?
IBM's mainframe business is massive. They just reported their highest mainframe revenue in 20 years. But here's the thing. Modernizing these systems has been prohibitively expensive. You need teams of consultants. Armies of them, spending years mapping out how the code works, what it does, where the dependencies are.
Why so expensive?
Two reasons. First, the code is incredibly complex. These are systems that have been running for 40, 50, 60 years, layers upon layers of business logic, none of it documented properly. There's this famous joke among programmers. When I wrote this code, only God and I understood what it does. Now, only God knows.
That's terrifying.
It is. And second, there's a talent problem. Most people who really understand COBOL are retiring or dying. It's not taught in schools anymore. So the few people who can work with it charge a premium, and companies have no choice but to pay them because their entire business runs on this code.
So IBM has basically had a captive market.
For decades. Banks can't afford downtime. They can't risk breaking their transaction systems. So they pay IBM millions, sometimes billions, to slowly, carefully modernize their COBOL systems. Or more often, they just keep paying IBM to maintain them as is.
And then Monday happened. What did Anthropic actually announce?
Monday morning, Anthropic published a blog post about Claude Code's new COBOL capabilities. They said their tool can automate the exploration and analysis work that drives most of the complexity in COBOL modernization.
What does that mean in practice?
All the stuff that used to take teams of consultants months or years, mapping dependencies across thousands of lines of code, documenting workflows, identifying risks, tracing execution paths, understanding data flows. Claude Code can do it automatically.
How fast?
Anthropic says teams can modernize COBOL code bases in quarters instead of years. They even put out a code modernization playbook and YouTube videos showing Claude Code working on actual COBOL systems.
And investors saw that blog post and immediately sold IBM stock.
$31 billion in market cap gone in one day.
That's one hell of a market reaction to a blog post.
Because investors understood immediately what this means. If you can automate the expensive part of COBOL modernization, you don't need IBM's consulting armies anymore. And you might not need their mainframes either.
Let's talk about the numbers. 13% in a single day. How does that compare historically?
This was IBM's biggest single-day drop since October 2000 during the dot-com crash. And it capped off a brutal February. IBM is down 27% for the month. That's on track to be their worst monthly performance since at least 1968.
1968?
We're talking about nearly 60 years. This isn't just bad, this is historic.
And it wasn't just IBM, right?
No, Accenture and Cognizant also got hit. They're consulting firms that make a lot of money doing exactly what Claude Code now claims it can do, legacy system modernization. The entire sector took a hit.
What were analysts saying? Mixed.
Some said the market overreacted. Evercore's analyst pointed out that IBM's clients have always had options to migrate away from mainframes, but they stick with them because of reliability. The argument is, if they haven't left already, why would they leave now?
But the market didn't buy that argument.
The market is forward-looking. It's not asking, will everyone migrate tomorrow? It's asking, what's IBM's growth trajectory if modernization becomes dramatically cheaper and easier? And that answer doesn't look good for IBM's consulting revenue.
If you're listening to this thinking, wait, my company uses COBOL or I work in legacy systems, drop a comment. I want to hear from people in the trenches. What's your modernization process actually look like? Is Claude Code going to change it? And if you're finding this breakdown valuable, hit subscribe. This is the Read AI, where we break down the tech stories that are moving markets and reshaping industries. Share this with someone who needs to understand what just happened to IBM. All right, Marcus, let's talk about whether this is actually as disruptive as the market thinks. So we've got this massive sell-off, but is Claude Code's tool actually going to kill IBM, or is the market panicking?
I think the market is repricing risk more than predicting immediate death. Let me explain the nuance here.
Please.
Translating COBOL code to a modern language, which is what Claude Code helps with, is only one piece of a much larger puzzle. Migrating off a mainframe requires migrating the data layer, the middleware, the transaction processing systems, the job scheduling infrastructure, the integration points with every other system, the operational procedures, the disaster recovery setup, the security controls, so it's not just the code. It's decades of accumulated technical infrastructure, business processes, and institutional knowledge. One analyst, Michael Strickland, put it well. Code translation is not mainframe migration. You can modernize the COBOL, but that doesn't mean you can easily move off IBM's platform.
So IBM should be fine.
Not necessarily, because here's what changes: the economics. Right now, modernization is so expensive that companies just don't do it. They keep paying IBM maintenance fees forever. But if Claude Code drops the modernization cost by 80% or 90%, suddenly migration starts looking attractive.
Even if migration is still hard, it's now possible.
Right. The calculus changes. It goes from this is costs more than our entire IT budget and takes 5 years to this is expensive and takes a year, but we can actually do it.
And once companies start migrating, even slowly, IBM's recurring revenue starts eroding.
Exactly. It's not an immediate cliff, it's a slope, but it's a downward slope, and investors just repriced IBM based on that trajectory.
Let's talk about Anthropic for a minute, because this is the second time in a week they've tanked a sector with a blog post.
Yeah, last Friday they announced Claude Code Security, a feature that scans code for vulnerabilities. Cybersecurity stocks tanked. CrowdStrike, Palo Alto Networks, Okta, Cloudflare, they all got hammered.
And now IBM. Is Anthropic deliberately going after these legacy businesses?
I think they're demonstrating capabilities and the market is drawing conclusions. But look at their language. They talk about technical debt and decreasing developer productivity and digital transformation efforts that are bogged down. They're positioning Claude Code as the solution to all the legacy cruft that's holding companies back.
And legacy cruft is basically IBM's business model.
IBM's business model is built on the fact that migration is too hard and too expensive. Anthropic is saying, not anymore. Whether they can fully deliver on that promise is TBD, but the announcement alone was enough to crater IBM's stock.
What's IBM's response been?
They put out a statement saying their mainframe platform provides quality performance and security for various programming languages, not just COBOL. They're essentially saying the platform matters, not just the code. That's pretty defensive.
It is. They also said new AI tools emerge every week and that the fundamental engineering challenge of running mission-critical workloads at scale hasn't changed, which is true, but it also sounds like downplaying. Do you think IBM saw this coming?
They've been talking about AI-assisted code modernization for years. They even have their own tools for it. But I don't think they expected a competitor to make this much noise about it and trigger this kind of market reaction.
You mentioned earlier that COBOL programmers are retiring. How bad is that problem?
It's severe. The median age of a COBOL programmer is over 55. Very few schools teach it.
The knowledge is concentrated in a shrinking pool of people.
Why don't companies just retrain people?
Some do, but COBOL is weird. It's verbose, it's old-fashioned, it doesn't work like modern languages. And more importantly, understanding the business logic embedded in these systems requires domain knowledge that takes years to acquire.
So when those programmers retire, that knowledge just disappears?
Essentially, yes, and that's been another driver of IBM's consulting revenue. Companies are desperate to capture that knowledge before it walks out the door. They hire IBM to document it, maintain it, eventually modernize it.
And Claude Code potentially solves that problem.
It could. If the AI can analyze the code, understand what it does, and document it automatically, you don't need the graybeards anymore. You don't need to rush to capture their knowledge. The knowledge is in the code, and the AI can extract it.
That's impressive and depressing.
It's the same thing we've been talking about with the Matt Schumer episode. The jobs that seemed most secure because they required rare, specialized knowledge, those are exactly the jobs AI is targeting.
So we've talked about IBM. What about all the consultants who specialize in COBOL modernization?
That's a huge workforce. Accenture, Cognizant, IBM Global Services, countless smaller firms. There are thousands of people whose job is legacy system modernization.
And Claude Code just automated their job.
A significant portion of it, potentially. The analysis phase, the documentation phase, the dependency mapping, that's the stuff that takes forever and costs the most. If AI can do that, you need far fewer people.
What do those people do?
Some will shift to higher level work, strategy, risk assessment, business logic analysis, the stuff that still requires human judgment. But there won't be enough of that work for everyone.
So we're looking at job losses.
Almost certainly, though it'll happen gradually. Large enterprises don't move fast. Projects that are already underway will continue with human consultants. But new projects, or projects that haven't started yet, those might use Claude Code instead of hiring a team.
How many people are we talking about?
Hard to say exactly, but the legacy modernization consulting market is worth tens of billions of dollars annually. If that shrinks by even 30 to 40%, that's a lot of jobs.
All right, let's do a reality check. We've been talking about Claude Code like it's going to revolutionize everything. But does it actually work?
That's the key question. Anthropic has case studies and YouTube videos, but we're still early days. COBOL systems are notoriously complex, proprietary, and full of edge cases.
What are the challenges?
First, accuracy. If the AI misunderstands a critical piece of business logic, you could introduce bugs that don't surface until months later. Second, integration. These systems talk to dozens of other systems. Breaking those integration points could cascade through the entire enterprise. Third, testing. How do you validate that the modernized code does exactly what the old code did?
So there's risk.
Massive risk, which is why IBM's argument about mission-critical workloads at scale has weight. Banks can't afford to get this wrong. If an ATM network goes down because of a botched COBOL modernization, that's a disaster.
But if Claude Code works even 80% of the time,
then it becomes a tool that accelerates the process, even if humans still need to be in the loop. And that's still enough to disrupt IBM's business model. You don't need Claude Code to be perfect. You just need it to be good enough to dramatically reduce the hours humans spend on analysis. And we're already there.
We might be. That's what spooked the market. This is the second major sell-off triggered by Anthropic in a week. What's the broader pattern here?
AI is moving from cool demo to business threat faster than anyone expected. A year ago, we were debating if AI could write production code. Now we're watching entire sectors get repriced because investors believe AI can replace specialized, high-value work.
Which sectors are most exposed?
Anything where the value comes from specialized knowledge that can be codified. Legal research, accounting, consulting, code auditing, legacy system maintenance. If the knowledge can be captured in text or code, AI can learn it. And once AI learns it, the human expertise becomes less valuable.
What about the human-in-the-loop argument, that AI is just a tool that makes people more productive?
That's the optimistic view, and for some jobs that'll be true. But here's the math. If AI makes one person 5x more productive, you don't need 5 people anymore. You need one person and the AI.
So 4 people lose their jobs.
Right. Even in the AI as tool scenario, you still have massive workforce reduction. It's just slower and more subtle than robots replace everyone overnight. And the IBM sell-off is the market pricing that in.
For one specific sector, yes, but the same logic applies everywhere. Cybersecurity last Friday, legacy systems on Monday. Next week, it'll be something else. So where does this go from here? What are you watching for?
First, I want to see actual adoption. Will enterprises actually use Claude Code for mission-critical COBOL modernization, or will they be too risk-averse?
What do you think?
I think they'll start with non-critical systems first, test it on smaller projects, build confidence, then maybe move to bigger ones. But that could take years.
So IBM has time.
IBM has time, but the clock is ticking, and every successful Claude Code project makes the next one easier to sell. This is a ratchet, not a pendulum.
What else are you watching?
IBM's next earnings call. How do they talk about this? Do they downplay it, or do they announce their own AI strategy? Also watching whether other companies announce COBOL AI tools. If Claude Code works, everyone will copy it.
And competitors mean pricing pressure.
Exactly. If modernization becomes commoditized, margins collapse. That's bad for everyone who makes money on consulting.
What about IBM stock? Is it a buy after this drop?
I'm not a financial advisor, but here's how I'd think about it. IBM still has massive installed base, long contracts, enterprises that won't move quickly. But the growth story just got a lot weaker. If you're betting on IBM, you're betting that the pace of change is slower than the market fears.
What's your personal read?
I think the market got this one right. Not necessarily the magnitude of the drop, but the direction. IBM's business model is under real threat. Maybe not next quarter, maybe not next year, but over the next 5 years, I think they're in trouble.
Because Claude Code actually works.
Because the trend is clear. AI is getting better at this stuff, not worse. And once there's a viable alternative to IBM's captive ecosystem, customers will start to leave. It'll be slow, but it'll be real.
And IBM doesn't have an obvious pivot.
They're trying hybrid cloud, AI infrastructure, quantum computing, but mainframes and services are still a huge part of their business. Losing that revenue stream is going to hurt.
Marcus, this has been incredibly insightful and honestly a little unsettling.
It's an unsettling time in tech.
For everyone listening, this story isn't over. IBM's stock is still falling. We're down 27% for February. Anthropic is still rolling out new capabilities, and the broader question of which jobs are AI-proof is getting harder to answer. If you work in enterprise software, legacy systems, consulting, pay attention to this. The tools are here. The question is how fast they get deployed and how much they actually disrupt. But the disruption is coming. Subscribe to the Read AI for more stories like this, and share this episode with someone who needs to understand what's happening in enterprise tech. Because IBM's worst day in 26 years isn't just about IBM. It's about what happens when AI targets the foundations of entire industries. Marcus, thanks for breaking this down.
Thanks for having me, Alex.
I'm Alex, this is the Read AI, and we'll catch you on the next one.